There is a wide disconnect right now between Wall Street and Main Street. Inflation fears continue to rattle the markets. President Biden taking credit for what he's calling the strongest job creation economy in modern times. Today, the Labor Department reported the economy added 428,000 jobs last month. That's more than economists had predicted. It marks the 12th straight month of job gains above 400,000. Meantime, the unemployment rate held steady at 3.6%, just above the 50-year low of 3.5 from before the pandemic. President Biden touting the new jobs report in a speech in Cincinnati today. He says his policies are helping the economy.
I'm a capitalist. I want to build this economy from the bottom up and the middle out, because when that happens, everybody does well. The poor have a way up, the middle class do fine, and the wealthy do very, very well. Never get hurt when that happens.
The president insists the economy is still heading towards the right direction. Wall Street disagrees. The Dow dropping about 100 points today, one day after it plunged by more than 1,000, 3%. The S&P and NASDAQ also closed in the red this session. In a moment, CNBC's Kayla Tausche on the White House economic plan. First, NBC News senior business analyst Stephanie Ruhle. Stephanie, so many problems with the economy, but one of those problems is not the job market. How strong is it, and where do we see the most gains?
Shep, good to see you. We saw strong job gains across the board, but a couple sectors where we saw it the most: leisure, hospitality, travel. And that's no surprise. You've been reporting on it. We're expecting a huge travel summer. People coming out of COVID wanting to get out there and vacation again. And many business owners in resort and vacation towns, casinos, are worried they're not going to be able to get fully staffed for the summer demand. If you've got a niece or a nephew saying they can't find a summer job, send them to me, because those jobs exist for sure. We're also seeing big hiring in the public sector. Teachers, for example, still a huge amount of teachers need to be hired, but we're seeing a lot there. And it is a big positive to continue to see wage growth go up 5.5%. But a problem is inflation. With inflation running so hot, that wage growth gets eaten up real quickly.
And is that one of Wall Street's problems? Because they don't seem to be looking at any of this. They're looking somewhere else.
All right. Wall Street is completely worried about one thing: the Fed and slowing inflation. When the Fed raised rates earlier this week, at a first blush, markets felt great about it. And then they woke up the next morning and remembered that the Fed raising rates and slowing inflation is tricky. They have got to stick this landing. If they raise rates too much, too quickly, they could tip us into recession. And if they don't do it enough, inflation will continue to run. So trying to balance those two is really tough, and you could see that in skittish market response.
Yeah, tricky. Next week, though, we're getting another snapshot of inflation, Steph. What should we expect there? Is there relief in sight?
Maybe. Listen, we saw last month inflation go up 8.5% from a year ago. We expect it to be a bit lower than that, more like 8.1%. But remember, even if inflation slows, prices are still high. It doesn't mean prices are going to drop, so you'll feel better when you go to the grocery store. But the biggest issue really is oil and gas prices. And we know they remain high because of the situation in Ukraine, the situation with Russia. That's not changing anytime soon. And it doesn't just affect what you and I pay at the pump. Remember, everything that we buy needs to get delivered, shipped to the stores we shop from. And when the shipping costs go up, when gas prices go up for those trucks, you and I pay more.
Yes, we do. Stephanie Ruhle, thanks so much.